I think metals are ready to move. I think metals have been kind of underpriced and under pressure.
You're watching Silver News Daily. Subscribe for more. Did you know silver could skyrocket to $1,500, making early investors incredibly wealthy? It sounds unbelievable, right? But today, we have Todd Horwitz, a seasoned financial strategist, here to break down why this huge rally is not only possible, but could be imminent. Stay tuned as we uncover the market trends and investment strategies that could turn silver into a retirement gold mine. Trust me, you don't want to miss this.
Look, if Trump comes in, we're buying our oil from Saudi Arabia. Okay, we could drill our own oil. We have a 300-year supply in this country at current usage. Okay, and when Trump left office, oil was $31 a barrel. Okay, so that would immediately cut your costs. And of course, since about 80% of everything we do is correlated to oil, whether it be the cost of production of plastics or the cost of delivery, the cost of driving your car. Okay, so that brings the inflation gauge down immediately. Okay, as far as the money supply, that's more the Federal Reserve's baby, because the government does not, the Federal Reserve is the one who decides to create more money, and they're way out of their mantra and what they're supposed to be doing, because their job is supposed to be stable markets and jobs, not printing money to whenever. But of course, when you have a fiat currency system that is fraudulent and manipulated and has no backing, you can do whatever you want, because of course the dollars are more monopoly dollars right now. I mean, this Dow Jones at 40,000. When I started trading 40 years ago, the Dow Jones was 800, and you lived a hell of a lot better when the prices were down there, based on what the prices were down there. But it has not stayed in a correct correlation, because you've got too much federal intervention, which started with Alan Greenspan.
Before we dive into Todd Horwitz's analysis, let's take a closer look at the current silver market. Recently, silver prices have been fluctuating, largely due to the U.S. dollar's recovery. The latest U.S. retail sales data outperformed expectations, boosting the dollar and temporarily dragging down silver prices. However, this isn't the whole story. Despite these short-term movements, silver's long-term outlook remains strong. The Federal Reserve is expected to start cutting interest rates soon, which could significantly boost silver prices. Currently, silver is trading in a range between $30.40 and $30.80. with strong support at the 50-day exponential moving average. With the fundamentals in place and technical indicators showing promise, silver is setting the stage for a potential breakout. And with Todd Horwitz's insights, you'll see why this precious metal might just be the investment opportunity of a lifetime. So what makes silver such an attractive investment? Let's find out in the next segment. But first, if you find this information valuable, make sure to hit the subscribe button to stay updated on the latest market trends and insights.
To screw the American taxpayer. They'll help bail out the banks once again, which is ridiculous. They should let the banks go out of business. If you want to bail out somebody, bail out the depositors, not the banks. Why would we support a business model that is bad, that allows you to make a fortune? And if you go out of business, well, we'll bail you out so you can make a fortune again. Again, the whole system is screwed up because of too much intervention, too much of the deep state, too much of things going on. And we do not allow the free market to trade to benefit everybody. As much as this administration complains about, well, the rich don't pay their taxes, blah, 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 they've cleared the way for the rich to get much richer. Okay, and they've cleared the way to destroy a middle class, because if the middle class is not in a recession, I would be totally shocked, because you can see by the number of homeless, the number of people on the street, the number of people that aren't working, and the number of jobs that have been.
Now let's delve into Todd Horwitz's expert analysis on why silver is poised for a significant rally. Todd, a renowned financial strategist and the founder of Bubba Trading, has long been bullish on precious metals, particularly silver. He argues that silver is currently undervalued and has significant upside potential, making it an attractive investment. One of Horwitz's key points is silver's dual role as both an industrial and monetary metal. Unlike gold, silver has extensive industrial applications, especially in technology and renewable energy sectors. This industrial demand provides a strong foundation for future price increases. For instance, silver is a critical component in solar panels, and as the world shifts towards renewable energy, the demand for silver is set to rise sharply. Horwitz also emphasizes silver's role as a hedge against economic instability. In times of economic uncertainty, investors flock to tangible assets like silver and gold. With ongoing concerns about inflation and monetary policies, silver's appeal as a safe haven asset continues to grow. Furthermore, Horwitz highlights that silver's market dynamics are currently very favorable. He points out that the current economic policies, including excessive money printing and interest rate manipulation, are setting the stage for a significant price rally. As more investors recognize silver's potential, the demand is likely to surge, driving prices even higher. In summary, Todd Horwitz believes that the combination of silver's industrial demand, its role as a monetary metal, and the current economic conditions create a perfect storm for a massive price rally. Stay with us as we explore how these factors are converging to make silver an exceptional investment opportunity. And don't forget to leave your thoughts in the comments. Do you agree with Todd's analysis? What are your predictions for silver's future? Let's discuss.
I don't think he can just generally change it. I think, though, what we'll see with the Trump presidency is a much lower inflation gauge. I think you'll see crude oil back at $30 a barrel instead of 85. I think you'll see the cost of goods and services go down. And you also have another part that you're destroying right now, which is the farming community, because somebody's keeping their finger on the scale of these grain markets. And right now, these farms are losing money. With every row they plant of grains, they're losing money because the input cost is so much higher, and they need their inputs to come down, which is in natural gas, which is heating oil, diesel fuel, and of course crude oil.
Let's dive deeper into Todd Horwitz's critical views on current economic policies and their impact on silver prices. Horwitz has been vocal about the potential risks posed by the Federal Reserve's ongoing monetary policies. He argues that excessive money printing and interest rate manipulations are not sustainable and could lead to severe economic instability. Horwitz points out that the Federal Reserve's actions, such as quantitative easing and artificially low interest rates, have distorted market dynamics. These policies have inflated asset bubbles and increased the risk of economic collapse. In such a scenario, tangible assets like silver become even more attractive to investors looking to safeguard their wealth. Moreover, Horwitz believes that the current economic environment is ripe for a significant shift towards precious metals. With inflation rates rising and the purchasing power of fiat currencies declining, silver presents a compelling alternative. He highlights that silver's affordability compared to gold makes it an accessible entry point for many investors seeking to hedge against economic uncertainty. Additionally, Horwitz emphasizes the geopolitical factors that could further drive silver prices up. Global economic tensions, trade disputes, and political instability contribute to market volatility, increasing the demand for safe haven assets like silver. He predicts that as these factors continue to unfold, more investors will turn to silver to protect their portfolios. In essence, Todd Horwitz's analysis suggests that the Federal Reserve's policies, coupled with rising inflation and geopolitical risks, create a strong case for higher silver prices. His critical stance on current economic policies underscores the importance of diversifying investments and considering precious metals as a strategic component of one's portfolio. As we continue, we'll delve into Horwitz's investment strategies and how you can capitalize on these market conditions. But before that, what are your thoughts on the Fed's policies? Do you think they are sustainable, or do you agree with Horwitz's concerns? Share your opinions in the comments below, and don't forget to subscribe for more insights.
If you're an investor in this equity market, you should be hedged. I mean, that's number one. We hedge all the time. I mean, I'm 100% invested in the equity market, but I'm fully hedged, so I've got a maximum risk of about 4 or 5% if the market collapses and goes to zero. I think that you should have some gold and some silver and maybe some platinum. I mean, platinum seems to be a pretty good value right down at these levels. It's less than gold. It used to be over gold. And I think you have to be diligent about how you're investing. And of course, you should never be investing with funds you don't have. If you're leveraging your investment, then you're going to go broke. There's no way to be leveraged if you don't have the capital. So if you have to make sure the first thing everybody should do is they have credit card debt before you invest, pay the credit card debt, because you're not going to make 26% return. So the first thing you do is you pay your credit card debt. The second thing you do is you start investing whatever you can afford monthly as part of your bills. You start putting that into the equity market no matter what, because the equity markets have proven an 8.5% gain year over year since the history and 10% since 1950. So if you're going to continue to do that, but again, it has to be with dollars that you have that you can afford, that you're not going to have to sell it. The same when you buy gold and silver. You cannot buy with money you don't have, because if you're forced to sell it, when you're forced to sell it, you're not going to like the price. You're going to have to sell that, and the loss you're.
Now let's explore Todd Horwitz's strategic investment advice on leveraging silver's potential. Horwitz is a strong advocate for incorporating precious metals, particularly silver, into a diversified investment portfolio. His approach centers around balancing the inherent volatility of silver with its substantial upside potential. First and foremost, Horwitz recommends physical silver as a cornerstone of any precious metals investment strategy. Unlike paper silver, physical silver provides direct ownership and eliminates the risks associated with market manipulations and counterparty defaults. He emphasizes buying silver coins or bars and storing them securely as a long-term hedge against economic instability. In addition to physical silver, Horwitz advises considering high-quality silver mining stocks. These stocks can offer significant leverage to the price of silver, meaning that a rise in silver prices often results in an even greater increase in the value of mining stocks. This can amplify returns, although it also comes with higher risk. Therefore, Horwitz suggests focusing on well-established mining companies with strong track records and solid financials. Another critical element of Horwitz's strategy is the concept of dollar cost averaging. He advocates for consistently investing a fixed amount in silver over time, regardless of its price. This approach reduces the impact of market volatility and allows investors to accumulate silver at an average cost, smoothing out the highs and lows of price fluctuations. Horwitz also underscores the importance of maintaining liquidity. He advises keeping a portion of one's investment portfolio in cash or cash equivalents. This liquidity can provide the flexibility to take advantage of market opportunities or to weather economic downturns without being forced to sell precious metals at an inopportune time. Finally, Horwitz encourages investors to stay informed and adaptable. Markets are dynamic, and staying updated on economic trends, geopolitical developments, and silver market conditions is crucial. He suggests following reliable sources of financial news and analysis to make informed decisions. In summary, Todd Horwitz's investment strategy involves a mix of physical silver, mining stocks, and disciplined investment practices like dollar cost averaging and maintaining liquidity. By following these principles, investors can potentially maximize their returns while mitigating risks. As we move on, we'll examine the technical analysis of silver prices and how to interpret key market indicators. Meanwhile, have you considered investing in silver or other precious metals? What strategies do you find effective? Share your thoughts in the comments, and remember to hit that subscribe button for more expert insights.
But everybody's portfolio should hold some. I mean, platinum at one point was over 2,500. So, again, you're looking at platinum right now at 1,000. So I think, again, this is not something that is going to be, that you're going to look at and say, well, how are the earnings? How is it? We don't have enough platinum. It should be increasing in price along with palladium and other things like that. And that's what we're really watching. And again, it's not a short-term play. It's not a play that listen, when you buy metals, you're not buying them to trade them, to scalp them out. You're buying them to hold them for a long-term protection. And I am of the opinion that platinum will once again go over the gold market when we finally get it going. But again, right now, the total focus of all investing dollars basically goes into the markets right now, into the equity markets, which are totally an air balloon and a house of cards that will collapse again, as has done, in 1987, 2001, 2008, and again, the next one that comes, and many before that, going back to 1929. We continue to forget about the problems and the overvalue that we place on these. And of course, part of that is the big old grand scheme of things to help, let's let the rich and the wealthy get wealthier and continue.
Let's delve into the technical analysis of silver prices, a crucial component for understanding market trends and making informed investment decisions. Todd Horwitz often emphasizes the importance of technical analysis in predicting future price movements and identifying optimal entry and exit points. Currently, silver is trading in a range between $30.40 and $30.80, showing signs of consolidation. This range-bound movement suggests that the market is finding a balance between supply and demand, preparing for the next significant move. A key indicator to watch is the 50-day exponential moving average, EMA, which is currently providing strong support around the $30.70 level. This EMA acts as a dynamic support level, guiding the price and helping investors identify potential buying opportunities. Another important technical indicator is the Relative Strength Index, RSI. The RSI oscillates between 40 and 60, indicating indecisiveness among market participants. When the RSI approaches the upper end of this range, it suggests that silver is becoming overbought, potentially signaling a pullback. Conversely, when it nears the lower end, it indicates oversold conditions, presenting a possible buying opportunity. Horwitz also highlights the significance of key psychological levels, such as the $30 and $32 marks. The $30 level has historically attracted substantial buying interest, making it a crucial support zone. If silver prices dip towards this level, it could present a favorable entry point for investors. On the upside, the $32 level acts as a strong resistance, where previous attempts to break higher have faced selling pressure. A successful breach above $32 could signal a bullish breakout, opening the door to higher price targets. Furthermore, Horwitz advises monitoring broader market trends and geopolitical events, as these can impact silver prices significantly. For instance, changes in interest rates, industrial demand, and geopolitical tensions can all influence silver's market dynamics. Staying attuned to these factors can provide additional context and help refine technical analysis. In summary, technical analysis tools like the 50-day EMA, RSI, and key psychological levels are invaluable for understanding silver price movements. By combining these technical insights with broader market trends, investors can make more informed decisions and potentially capitalize on silver's upside potential. As we continue, we'll explore the broader market context and how various economic factors influence silver prices. What technical indicators do you find most useful when analyzing silver? Share your thoughts in the comments, and don't forget to subscribe for more expert insights.
We haven't seen the reaction yet because there hasn't been a lot yet in the market. They're still going higher. Remember, we have an overflooded money supply. And of course, if you recognize that about 10% of the world controls about 95% of the market, they've got plenty of dough. And they're still being able to borrow at lesser rates than others and use that money. So as long as the equities keep clicking up, it's going to show you that they're not concerned. Now, again, remember, the markets don't make an announcement and tell you that there's going to be a problem. We already recognize that there are over 600 regional banks that are expressing they have problems, which means that there's 600 expressing, there's probably 1,200 that are in trouble. And I think that the big banks are in trouble as well. I think they're once again over leveraged, and I think part of this fluff that we're seeing in the equity markets is to keep the news away from the banks. But if we go back into 2008, Paulson came on Vacination in September, about 2 months before the collapse, and said everything is great. And I think once we hear that announcement again, you'll know that there's a lot of big problems. And there's been many warning signs, including, again, we had today's jobs number, which was higher than expected, but the jobs are lousy. Since 2021, 66% of the new jobs have gone to illegal immigrants, 33% to Americans, and those are Americans that have to work more than one job to make ends meet. So we've got a real problem with inflation, we've got a real problem with recession, and we've got a real problem everywhere else. So I think that, of course, I think more are leaning right, and I think that you're seeing that across the globe right now, with the exception of...
Let's place silver within the broader market context and examine how various economic factors influence its prices. Understanding these factors can help investors make more informed decisions and better anticipate market movements. Firstly, interest rates play a crucial role in silver pricing. When interest rates are low, the opportunity cost of holding non-yielding assets like silver decreases, making it more attractive to investors. Conversely, rising interest rates can lead to higher yields on other investments, potentially drawing money away from silver. However, even in a high-interest environment, silver can benefit if investors perceive it as a hedge against inflation and economic instability. Secondly, industrial demand is a significant driver of silver prices. Silver is not just a precious metal. It has extensive industrial applications, particularly in the technology and renewable energy sectors. For example, silver is a key component in solar panels, and as the world shifts towards renewable energy, the demand for silver is expected to rise. This industrial demand supports silver prices and provides a solid foundation for future growth. Geopolitical tensions also influence silver prices. In times of political or economic uncertainty, investors often seek safe haven assets like silver and gold to protect their wealth. Events such as trade disputes, conflicts, and political instability can drive up the demand for silver, pushing prices higher. Another factor to consider is the relationship between silver and the US dollar. Generally, there is an inverse relationship between the value of the US dollar and silver prices. When the dollar strengthens, silver becomes more expensive for investors using other currencies, which can dampen demand and lower prices. Conversely, a weaker dollar makes silver more affordable internationally, boosting demand and supporting higher prices. Todd Horwitz also emphasizes the importance of market sentiment and speculative activity. Investor sentiment can be influenced by various factors, including economic data releases, central bank policies, and market rumors. Speculative trading can amplify price movements, leading to higher volatility in the silver market. In summary, silver prices are influenced by a complex interplay of interest rates, industrial demand, geopolitical tensions, currency strength, and market sentiment. By staying informed about these factors and how they interact, investors can better anticipate silver price movements and make strategic investment decisions. As we move on to discuss the potential risks and rewards of investing in silver, what do you think are the most significant factors influencing silver prices today? Share your insights in the comments, and be sure to subscribe for more expert analysis.
I think silver looks great. I think silver is got a better chance, and I think silver will narrow the gold to silver ratio. And I think that silver will outperform. By the end of the year, I think silver will outperform gold. But I think that if you're an investor or whatever, I think you should have a representation of both. I think that they are going to have some value. And in my opinion, there's a very real chance, depending on what happens in November, that you could need gold and silver as a natural currency. Well, I think gold is going higher, Elijah. I mean, the pullback was natural. It was expected. We were stuck in a range, and still are stuck in a range, 2,300 to 2,400. But it wouldn't surprise me if by the end of summer we're, 25, 2,600, maybe a little bit higher. I mean, I'm not going to make some crazy, ridiculous prediction that they're going to the moon, but I think that they're going to continue to go higher. And the more problems that become in this country, the higher the value on physical metal.
We've covered a lot of ground so far, and now it's time to bring everything together and build towards the conclusion that supports Todd Horwitz's bold prediction of silver reaching $1,500. This is where all the pieces fall into place. To recap, we've seen that the current silver market is influenced by a variety of factors, including economic policies, industrial demand, and geopolitical tensions. Todd Horwitz's analysis provides a compelling argument for why silver is not only undervalued, but also positioned for a substantial rally. The Federal Reserve's monetary policies, including excessive money printing and interest rate manipulations, have created an environment ripe for precious metals to shine. As inflation rises and fiat currencies lose value, investors are increasingly turning to tangible assets like silver as a safe haven. Horwitz's strategic investment advice further underscores the potential of silver. By advocating for physical silver, high-quality mining stocks, and disciplined investment practices, he offers a roadmap for investors to capitalize on silver's upside while managing its inherent risks. The technical analysis supports this outlook, with key indicators pointing towards a bullish trend. The 50-day EMA and RSI suggest that silver is poised for a breakout, and the psychological levels of $30 and $32 provide critical support and resistance points. Moreover, the broader market context adds another layer of support to Horwitz's prediction. Industrial demand for silver, driven by its applications in technology and renewable energy, is set to grow. Geopolitical tensions and economic uncertainties only add to silver's appeal as a hedge against instability. The combination of these factors creates a perfect storm for silver to potentially hit $1,500. So what does all this mean for you as an investor? Todd Horwitz believes that by understanding these market dynamics and adopting a strategic approach, you can position yourself to benefit from the upcoming rally in silver prices. As we conclude, it's clear that silver presents a unique investment opportunity with substantial upside potential. Remember, while the potential rewards are significant, it's essential to stay informed and adaptable. Keep an eye on market trends, economic indicators, and expert analyses to make informed decisions. And as always, consider your own risk tolerance and investment goals when planning your strategy. In summary, Todd Horwitz's prediction of silver reaching $1,500 is grounded in a thorough analysis of market trends, economic policies, and investment strategies. By taking a balanced approach and staying informed, you can potentially capitalize on this exciting opportunity. Don't forget to subscribe for more expert insights and updates on the silver market. And remember, this is not financial or investment advice. Always do your own research and consult with a financial advisor before making investment decisions.
No, I think metals are ready to move. I think metals have been kind of underpriced and under pressure, and you've started to see some of the breakout. I mean, if you look at silver, it really hasn't done anything for years, okay, in big perspective. And I think that, again, this is the ever-changing evolution that we will see. And of course, that includes Bitcoin as well. Okay, because Bitcoin has now become, more recognized as another stored value of asset, and non-regulated, non-central bank, controlled. And of course, the United States being the fourth largest holder of Bitcoin, although they fought it all the way. These are things that happen. And again, I think that having some stored assets, of hard assets that you can put in your hand, and I'm not talking about buying paper, because paper is worthless, because I don't think there's enough gold and silver in the world to cover the amount of paper that's written on it. I'm talking about going out and buying real gold and silver and putting it in your safe and being prepared, because if I'm right and there is a problem, and certainly I could see a major problem if President Biden wins the election in November, I could see a massive problem happening in this country, because there's a lot of people that are against it, and it would. I think we're on the verge of the next civil or revolution.
Let's explore the potential risks and rewards of investing in silver, a crucial consideration for any investor. While silver offers substantial upside potential, it also comes with certain risks that must be carefully managed. Silver is known for its volatility, which can lead to significant price swings. For investors, this means the potential for substantial gains if the market trends favorably. As Todd Horwitz points out, silver's unique position as both an industrial and precious metal provides multiple avenues for price appreciation. Like gold, silver is often seen as a hedge against inflation. In times of rising prices and declining purchasing power of fiat currencies, silver can maintain its value and even appreciate, providing a buffer against inflationary pressures. The increasing demand for silver in industries such as technology, electronics, and renewable energy adds a layer of support to its price. With the global push towards green energy, silver's role in solar panels and other technologies ensures sustained industrial demand. Including silver in an investment portfolio can enhance diversification. Precious metals often move independently of stock markets and other asset classes, helping to reduce overall portfolio risk. However, silver also comes with risks. Its high volatility can lead to significant short-term price fluctuations, which can be a double-edged sword, leading to rapid gains but also steep losses. Silver prices can be affected by changes in economic conditions, such as shifts in interest rates, currency values, and global economic growth. For instance, a stronger U.S. dollar or rising interest rates could negatively impact silver prices. While industrial demand supports silver prices, it can also lead to volatility. Economic downturns or technological advancements that reduce the need for silver in certain applications can negatively affect its price. Geopolitical tensions can influence silver prices, but they can also create uncertainty. For example, changes in trade policies, tariffs, and political instability can lead to unpredictable market reactions. Physical silver, while valuable, can sometimes be less liquid than other investments. Selling physical silver quickly and at a favorable price can be challenging, especially in times of market stress. To navigate these risks while maximizing rewards, Todd Horwitz suggests a balanced approach. This includes holding physical silver to provide direct ownership and eliminate counterparty risk, although it's essential to store it securely. Investing in high-quality mining stocks offers leverage to silver prices, potentially amplifying returns. Consistently investing a fixed amount over time helps smooth out price volatility and reduces the risk of making large investments at inopportune times. Keeping a portion of the portfolio in cash or cash equivalents provides flexibility to capitalize on market opportunities or weather downturns without having to sell silver at a loss. In conclusion, while investing in silver comes with inherent risks, the potential rewards can be substantial. By understanding these risks and employing strategic investment practices, investors can better position themselves to benefit from silver's unique market dynamics. As we approach the final segment, we'll recap the key points and build towards the conclusion that supports Todd Horwitz's prediction of a significant rally in silver prices. In the meantime, what are your thoughts on balancing the risks and rewards of investing in silver? Share your strategies in the comments, and don't forget to subscribe for more insightful discussions.